Howdy, everybody. Welcome to Liberty Call. Today is Friday. Woohoo! July 19th, 2024. Hope you're having a fantastical day out there in the interwebs. It is a kind of partly cloudy day here in Colorado, and but we did have a bear sighting. Very exciting. Let me bring this up on the screen here for you guys. Give me a second. And let me drag this over here. Oh, I lost my screen. All right, let me share this. We had this big man come by the house today. Very, very exciting. And he kind of wandered around. I could bring up the video. It'd take too long, but wandered down the driveway and came and wandered through the bushes and went over to the neighbor next to us. So exciting stuff here at the Dahlman compound today. So anyways, like I said, hope you're having a good day. If it is your first time watching Liberty Call, if you could give me a thumbs up, a like, a share, subscribe, a follow, and press that notification bell. Another ugly day in the markets, folks. I don't know if the bear sighting could be a prelude to a bear market. I don't know. I mean, it happened a couple years ago. We had a bear come through, got into my garage. I guess that was that last year or 2 years ago? I'd have to go back and look. But the market, I mean, seriously, that day, the market went for like 2 or 3 months. Anyways, all right, let's go ahead and get into the markets for today, see how they turned out. Dow Jones was down 0.93%, 377 points, closed at 40,287. The S&P 500 down 0.65%, down 36 points, closed at 5508. NASDAQ down 0.78%, 138 points, closed at 17,732. The VIX was up 3.7% today. It's at 1652 right now. Canada down 0.16. Brazil is flat at 0, and Mexico up 1 1/3. In Europe, Germany was down 1.03%, the UK down 0.6%, France down 0.69%, the Netherlands down 0.95%, Spain down 0.54%, Italy down 0.91%, Switzerland down 0.63%, and Portugal up 0.2%. Russian exchanges were both in the green again today. The MOX up 0.78%, the RTSI up 0.61%. And the Asian markets, the Nikkei in Japan was down 0.07, Australia down 0.81, New Zealand down 0.3. In China, the Shanghai was up 0.17, the Shenzhen Component up 0.27%, China A50 down 1/3, GJ Shanghai up 0.29%, Hang Seng down 2.03%, and the Taiwan weighted down 2.26%. All right. Well, that was today's indexes. Let's go ahead and zoom in here and take a look and see how the markets did overall for the week. Let's start now on the 15th. Dow Jones, that's what we're on right now, is going to finish up about 0.46%, so about 0.5% for the week. The S&P 500 is going to be down about 2.38%. The NASDAQ down about 4.16%. The Dow Utilities up about 1.58%, and the Dow Transports up about 1.5%. So, all in all, the kind of in order of things, the Dow up about, what was that? What did I say? About 0.25% or about 0.5%. The S&P 500 down 1.4%, and then the NASDAQ down about 4%. So, ugly week for growth stocks, and the growth sector really pulling down on the broad market, the S&P 500, and then the blue chips. Your Dow 30 fared up much better this week. So. All right. Well, that is the week in the markets. Good stuff. All right. Let's get over to the economic data that came out this week. Starting out with the initial jobless claims came in at 243,000. The forecast was 229, and the previous number was 223. Continuing claims came in at 1.867 million. Forecast was 1.860. Previous number was 1.847. Retail sales year over year grew by 2.28%. The previous number was 2.59, so a little bit of a contraction there. Month over month was flat. The forecast was a 0.3% contraction, and the previous number was 0.3% growth. The National Association of Home Builders Housing Market Index came in at a 42. The forecast was 43, and the previous number was a 43. Housing starts came in at 1.353 million. Forecast was 1.3, so a little over forecast. The previous number was 1.314 million. Housing starts month over month grew by 3%. The previous number was a contraction of 4.6%. Industrial production year over year has grown at 1.58%. The previous number was a 0.34%. And on a month-on-month number, it has grown by 0.6% from last month. And the forecast was 0.3%. The previous number was a 0.9%. I think this is our last one. The Federal Reserve balance sheet came in at $7.208 trillion, and the previous number was $7.224 trillion. So a little bit lower by about 8 or 16, dropped by about $16 billion over the last month. All right. So the Fed is slowly, very slowly rolling off those assets off their balance sheet. So at this rate, it'll take until I'm in the ground before they actually, get everything off their books at this pace. Well, probably not, but it just seems very, very slow. All right, let's head into our market recap. S&P 500 deepens losses as tech wreck continues. Oh, gosh, I got something in my eye. Not pleasant. It's hard to read when you only got one eye. All right, we'll try and get through this. All right, the S&P 500 fell on Friday, headed for its worst week since April as investors processed a wave of quarterly results and a broad rotation out of high-flying tech stocks that has unsettled markets. Netflix fell less than 1% after providing weaker than expected revenue guidance, overshadowing its better than expected quarterly results. The company highlighted efforts to boost its ad tier streaming after phasing out the basic ad-free version in the US and France. Let's see here. Wedbush reiterated its outperform rating on Netflix, noting its potential for ad tier revenue growth into 2025 and beyond. CrowdStrike Holdings slumped 13% following a global IT outage caused by a software update. Despite the setback, some analysts believe the impact of CrowdStrike will be limited as the outage wasn't due to a cybersecurity vulnerability. ARM Holdings sidestepped the tech sector's weakness, rising 3% after Morgan Stanley upgraded its rating amid optimism surrounding AI. The tech sector will remain in focus next week with major companies like Microsoft, Alphabet, and Tesla set to report earnings on Tuesday. Amex travelers stumble. Let's see here. American Express fell over 2% after reporting disappointing revenue growth despite beating profit estimates for the second quarter. Intuitive Surgical climbed over 8% after exceeding earnings expectations, while Travelers dropped over 5% due to substantial catastrophe losses. Political wrangling is in focus for Biden to exit the race. The 2024 presidential race drew attention on Wall Street amid increasing calls from within the Democratic Party for President Joe Biden to reconsider his re-election bid. Reports suggested former House Speaker Nancy Pelosi indicated Biden might be persuaded to exit the race. Like, Biden has a clue what's going on. I mean, that man, he's got like two hamsters in there, and they're both drunk, in my opinion. Concerns over Biden's health and the rising popularity of Republican nominee Donald Trump have cast doubts on Biden's ability to secure a second term. I mean, not that I have any faith in the voting system. I mean, it's as corrupt as the politicians who they elect. But anyways, I'll keep my opinions to myself there. All righty, next up, with CrowdStrike in the news, let's dive into this. This comes from Investopedia. What is CrowdStrike, and how did its update cause a global tech outage? All right, a defective update from cybersecurity company CrowdStrike caused a global outage on Friday, severely impacting Microsoft's platforms and affecting a wide array of organizations and businesses, including airlines, banks, and the London Stock Exchange, media outlets, and government agencies. I know I tried to schedule an appointment for my dog so he could have his physical, and their scheduling software was not working. So it's like, seriously? And then I had an email that had been sitting in my inbox in my personal email all week saying that you got to do an upgraded login for the Social Security Administration if you want to be able to use it going forward. And so I go and try to create the new updated login, and of course the Social Security website is down. So it's like everything I've been trying to do today has been well, not everything, but, anything that requires, outside of my little office here has been, hampered by this issue. Although it looks like the trading platforms are doing okay. All right, let's dive back into this. CrowdStrike, a major provider of cybersecurity software, partners with cloud platforms such as Microsoft Azure, Alphabet's Google Cloud, and Amazon Web Services. These platforms are integral to various industries, including healthcare, financial services, telecommunications, and media, amplifying the reach and impact of the defect. Microsoft Azure alone serves 95% of Fortune 500 companies, highlighting the extensive fallout from the outage. The issue began with a CrowdStrike update defect that affected customers using Microsoft's operating system. Announced by CrowdStrike CEO George Kurtz early Friday morning, the defect led to disruptions across numerous sectors due to CrowdStrike's extensive customer base. Significant Microsoft services such as Xbox Live, Microsoft's 365, and Teams experienced spikes in outages as reported by Down Detector. The outage had widespread repercussions affecting major U.S. banks like Bank of America and social media companies like Meta. Several airports grounded flights, impacting airlines including Delta Airlines, United, American. Government agencies such as the UK's National Health Service were also affected. CrowdStrike identified the source of the issue and deployed a fix, although some businesses are still grappling with the aftermath. Microsoft reported that some Azure users have recovered, but others continue to experience issues. The significant disruption caused CrowdStrike's shares to plummet by over 10% in early trading on Friday. In summary, the CrowdStrike update defect led to a substantial global outage affecting numerous sectors, highlighting the interdependence of modern digital infrastructure and the critical importance of cybersecurity in maintaining operational continuity across industries. Yeah, well, I think they just told everyone across the globe that if you want to take down the financial, the healthcare sector, you only got to mess with one company. And I don't know if that's good news. All right, one last article here comes from Zero Hedge. New homes still seriously unaffordable in the U.S. And this comes via Political Calculations blog. See what they have to say. In May 2024, the affordability of new homes in the United States saw little change, with the mortgage payment for a typical new home consuming 43% of median household income. Wow, that's high. This level of expense places new homes out of the reach for the majority of American households. Real estate analytics from ATTOM defines a home as seriously unaffordable when homeowners spend at least 43% of their wages on housing. According to their analysis, more than 1/3 of markets they examined meet this threshold. This figure aligns with the national average for median new homes sold in relation to the median household income. A chart tracking the affordability of new homes from January of 2000 through May of 2024 shows this persistent trend of high housing costs relative to income. Despite fluctuations, the burden of housing costs remains significant for many Americans. Real estate affordability varies significantly across different states. Patrick Ross from WealthView provides a map illustrating this monthly income needed to afford a median home in each of the 50 states. This map highlights the disparities in housing affordability across the country, showing which states offer more affordability options and which are more expensive. Let's see if that map is... See, that's the chart, and then this is the map. I guess the dark, it's kind of small. It's hard to see. Yeah, so it's looks like California is the highest at about 19,000, and Texas is 7,900. Where I'm at in Colorado, it's 14,049, so one of the higher ones. Looks like, so you got California at 1. Looks like Washington State at 2, Colorado at Massachusetts at 3, Colorado at 4. So those look like the top ones. Shockingly, Florida's higher than Texas by about $1,500. So, anyways, let's go back. There we are. Okay, let's get back into the article. Let's see here. Key insights: national average. The mortgage payment for a typical new home consumes 43% of the median household income. Local differences: housing affordability varies across states, and the percentage of income required for housing has remained high over the years, indicating long-term trend of housing being a significant financial burden for households. And in conclusion, the data underscores the ongoing challenge of housing affordability in the U.S., with a significant portion of household income dedicated to mortgage payments. The situation is particularly acute in certain local markets, emphasizing the need for potential buyers to carefully consider local conditions when assessing housing affordability. And I guess we go back to this chart. Let me make it bigger. So I guess, if you have like a virtual job where, you could basically live anywhere. What I would do is kind of look at, is it close to where I'm at? Could I move from, say, Texas to, I wouldn't go to Louisiana, but maybe Oklahoma or Arkansas, Mississippi, anywhere along the Sun Belt's pretty affordable. Same through the Midwest, Kansas, there's nothing there except on the very east portion of it. Missouri's pretty nice, and Iowa, kind of flat, but nice there too. I'd stay away from Illinois. But if you could leave, a high residential cost state, like New York, the Northeast, or the West Coast, and, move further inland, even from like, say, California to Nevada. You basically cut your housing, expenses in half, going from about 20,000 to 10,000. So anyways, all right. Well, that is everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information there. If you need to get your financial crap together, give me a buzz. I'd be happy to help you. All right. Well, that is everything that I had for today. As I said, hope everyone has a fantastic weekend out there. My wife has a number of chores already assigned to me, so I will be busy this weekend, mostly in the garage, cleaning that out and getting it organized. So hope everyone has a good weekend, and I'll talk to you next time. Adios.